Welcome to episode number 4 of our new series, Financial Analysis Techniques, Global Case Studies. Our topic today is the financial performance with Dupont Analysis and three largest global producers in the renewable energy industry will be our case study today. But what is the Dupont Analysis and how does it look like?
As stated by Amrish Shah, it is a simple and intuitive way of looking at and analyzing financial statements and also comparing companies in widely different industries. Also, he presented the following image as a basic illustration of the DuPont framework. As you see, it's mainly based on two basic measures: the return on equity and the return on assets, or sometimes the return on investment.
Now, let us start with our first case study of IBERDROLA. On the left is the 5 years consolidated statement of financial position, and on the right, the consolidated income statement for the same company. Now, let's apply the first method of the 5 steps DuPont analysis. It's an equation to break down the return on equity or ROE further, to break it down further into its components. As you can see, the ROE or the return on equity is calculated by multiply the 5 equations as follows. The first, tax burden, which is equal the net income divided by the EBIT. EBIT is the earning before tax. The second step, we can see the effect of the interest expense on the net operating margin by calculating the interest burden. That's equal the EBIT or the earning before tax divided by the EBIT, which is the earnings before interest and tax. The third step is now I will break down the net profit margin or the operating margin by dividing the EBIT by the revenue. Step number 4 is the asset turnover, which is equal the revenue divided by the total assets. But wait, it's assumed to be the average total assets, not just the total assets. But in our case, we will assume it will be the total assets for each year. Also, the model uses the gross assets value instead of net asset value. This will mean ignoring the depreciation. Step number 5 is the financial leverage ratio, which is equal the total assets divided by the shareholders' equity, also assumed to be the average total equity. Then finally, we will multiply the 5 steps or equations to get the final result of the ROE. Another additional step is to calculate the return on assets or the ROA by dividing the EBIT, the earning before interest and tax, by the average total assets.
You can use icon sets conditional formatting same that I've used. You can watch our first episode, Dynamic Shapes and Formatting Effects, in the other series, Excel for FP&A and Cost Management.
Now, let us discuss the final results for our case study of IBERDROLA, and one of our experts, Mr. Walid Yassin, stated that
return on equity, ROE, to be an important metric when evaluating a company's financial performance. Companies with high and consistent ROE over time indicates that the company is generating strong profits from its shareholders' equity. In addition, companies with ROE that is consistently above their cost of capital, indicating that the company is creating value for its shareholders. However, other factors should be considered when evaluating a company, such as its management team, durable competitive position, and growth prospects. Based on the ROE calculation, we can see that the company's ROE has increased from 7.7% in 2018 to 8.8% in 2022. This indicates that the company has been able to generate relatively inconsistently high profits from its shareholder equity over time. This relatively little improvement and inconsistency in the ratio is driven by large increase in equity over time compared by relatively increase in net income. Also, the relatively increase and inconsistency in ROE ratio is evident by ROA, asset turnover, and operating margin as they suffer the same trend and inconsistency. Finally, ROE is just one piece of the puzzle and should be considered in conjunction cost of capital and competitors ratio.
The second case study is Siemens Energy. On the left is the summarized consolidated statement of financial position, and on the right is the summarized consolidated income statement. Now can you interpret the final result and discuss what's mean? I will looking for your answer in the comments. The third and our last case study is Vestas. The same presentation and calculation. Again, can you interpret the final result and discuss what it means?
But to help you, I'd recommend that you can read a very helpful summary by Asif Masani. It's about top 10 ratios to analyze. You'll find the direct link of the post in the comments. Now, let's apply 3 ways to visualize our ratios and metrics by using the DuPont chart.
I have summarized the final metrics and ratios as a flow chart for the first 2 case studies of IBERDROLA and Siemens Energy. I have classified the ratios into 2 classifications, as you see, the income statements and the balance sheet, by breaking down the calculations of our 2 metrics of return on assets ROA and return on equity ROE. I have broken the calculation into its main components, as you see. Another way of summarization I have used by applying it for the 3 case studies of Vestas, of our third case study, our third case study of Vestas, by applying the 5 steps DuPont analysis: the tax burden, the interest burden, the operating margin, the total assets, and finally, the financial leverage ratio. Also, the calculation of the return on assets, or ROA.
Now, to fully understand this important analysis and its use as a key value driver, I would recommend you read a very important article by our expert Anders Liu-Lindberg. It's about, do you know the key value drivers in your company? Anders stated that we should therefore examine further why it is important to know the key value drivers and how to create an overview of them. Most are familiar with DuPont analysis, where the return on investment or equity is broken down into the main drivers. This is the simple principle that any finance professional can use to map the value drivers of their company.
See you in the upcoming episodes with another financial analysis techniques and another global case study. Goodbye.